Welcome back to the Capital Mindset Show, guys. We're your hosts, Austin and Fabio, and today we have something interesting for you guys. So this is a stock known as Bristol Myers Squibb, ticker symbol BMY, that Fabio is incredibly interested in. So today I'm going to be kind of picking his brain a little bit, figuring out what he likes about this company, why this specific company he's chosen this, and then also some prospects kind of for the industry. So jumping right into this, Fabio, what is this business? And what do you like about this business?
So this is one of the largest pharmaceutical companies in the world. Bristol Myers Squibb, we already said the name, ticker symbol BMY. And some of the things they focus on mainly is oncology treatments. So that's, for those who don't know, cancer. And they have a robust pipeline within that treatment sector, covering various different diseases. I can kind of get into that in the deep dive more in more detail, because that's going to be more prevalent. But for the sake of this preliminary analysis, what we kind of want to focus on is just a brief overview as to what it is they do and what they kind of focus on. So that's pretty much what we're looking at here. And so people require their treatments that they develop and create in order to treat their terminal illnesses. And in that way, they can survive. So it's a needs-based business, which is something that is very attractive. So like in different parts of the world, depending on the healthcare system that they utilize, a lot of the money that is put into these products are out of necessity, because without it, the end patient will not survive their ordeal. So because of that, you can kind of see a more stable business and a recession-resistant business. And they're also protected by patents. So that's a key factor when dealing with the pharmaceutical industry.
I was about to ask that.
Or the treatments they develop are patented. And that is supposed to incentivize the creation of future treatments. Because if you were to create a treatment for a disease, you would have 20 years upon the patent approval of exclusivity or patent filing. And at least in the United States, that's the 20-year mark. And that basically is your incentive to continue to develop more in the future. And that's the incentive for future individuals to create different treatments. And so that way we can reward them and then at the same time benefit from the inventions they create. So with that being said, Bristol Myers Squibb, I'll go over the recent price action. That's been due to some recent data that came out for one of their treatments that may have been questionable as to its effectiveness. So we saw a price decline from about 68 all the way down to, I think, the low of 57. I already added a small position around this price between 57 and 58. And taking a look at the longer term chart, we can kind of see this company has actually been a severe underperformer over the past 5 years. It's gone really nowhere. So we see from about 14% in 5 years. That's a terrible underperformer. So you have to be very selective as to when you're adding into this company. They did do a large merger, so just so everyone knows, with another pharmaceutical company, and that happened right around here, actually. So that's past them. I have made money in the past with a company called AbbVie. Right after their acquisition of Allergan, they had a similar collapse, and I bought in and made a very good amount of money on that one, and added that to my dividend income, my passive dividend income. So with Bristol Myers Squibb, I see another potential opportunity. I actually didn't add here, unfortunately, but I'm looking to make my position or bring it up to size as to, I'd say not an ancillary position. It's not a speculative position, but it's more along the lines of a smaller, longer term investment. If I were to see, we'll go over the prices when we get to the model, but just so everyone knows, that's what the recent price action is. Now, Austin, do you have any questions so far?
Yeah, so I'm kind of wondering, Fabio, and this is kind of a question that's been on my mind since you brought up the fact that they have patents. And my question is kind of, do they have a particular, almost like a monopoly on a specific kind of treatment for a specific kind of disease, or is more of their patents more broad, dealing with multiple different types of terminal diseases, not exactly having one particular, let's say, patent monopoly over one specific disease
Well,
in and of itself.
getting into the specifics of the patents, I would save that for the due diligence video.
Yeah.
But for this video, I just want to say, yeah, that they do focus mainly on oncology treatments, but
Okay.
this is such a large business that they have treatments that span into other illnesses or diseases. It's
Mhm.
not simply only oncology, but that
Okay.
is their main focus, correct? And they acquired a big pipeline from their acquisition. I think the company that used to exist was Celgene or something like that.
Mhm.
But they acquired this business, and with that came, they kind of fused pipelines together. I know that, well, we'll talk about that in the deep dive video, but their
Yes, this is the
pipeline is
preliminary
very
analysis.
extensive.
Yes.
It's a very interesting pipeline. And I know that the healthcare sector has been plagued by fears that there will be some sort of very large regulatory response. I don't actually buy into those fears because if, for example, we take a look at the some of the other countries that have different healthcare systems, these companies make a ton of money. So what the United States is different is in the abundance of options for treatments, while in these other countries they have lesser options. They have less
Mhm.
options for certain treatments. So you will have some companies, or the big companies, they'll do fine. They'll always do fine, regardless of what system, because as long as you need people who need treatments, these businesses will have business. Okay, so I kind of want to take our audience through the model now and play around with the numbers, see what our expectations are. I think everything's already plugged in, and what we did here is we assumed a 2% buyback. That we see that the cash flows, based on the cash flows, they're able to do a 9% buyback based on the current price. I'm not going to assume that. I'm going to average it to 2%. If I look at the average buybacks over the past 5 years, I see share dilution. Why do you think that is, Austin? I mentioned a key point had to do with the acquisition.
Yeah.
Yep.
I was about to say that.
So they acquired that company. And so if you take a look at the average buybacks over the past 5 years, it's negative because they diluted shareholders, but that was for the acquisition. So I think that was a good acquisition, by the way. So that was not a real dilution. That was a accretive dilution, which means basically they issued new shares, but then gained more from the issuance than they otherwise would have. And they mixed it with shares and debt. So it was a mixture of the two. So taking a look, I think going forward, I can expect, if I reinvest the dividends and I assume a small buyback, I can own more of the business at a range around 2% per year. That's what I'm going to assume. And then if I have to, what I get from these assumptions, I have to assume a growth rate of 12% or above in terms of the operations of the business. Now, real quick, I just want to take a look at what they think the short-term growth rate is going to be over the course of the next year. And they say about 22%. All right, so let's be more conservative than that. I don't want to assume that. I want to assume less than that.
12%.
Yeah,
Yeah.
12%.
Yeah.
So, but remember, we're compounding that for 10 years. So I'm not being extra conservative. Technically speaking, if I could get this under a 10% measure, that would be perfect for me. For example, when we were talking about here, that these prices over here were fantastic. And this was, the pre-crash. Okay, so this was not during the crash because so many stocks were cheap there. This stock was incredibly cheap around this range, and you had a huge margin of safety because we can kind of play around with the model and see what it spits out for us. But I think, let's say if we assumed a 5%, you see, there we go. So I could assume close to a 5% growth in operations, and I could still come out with a 20% rate of return year over year. I just had to reinvest the dividend, which the dividend, where we don't know how much the dividend is going to grow by each year. But I guess hopefully
that is for
it's
the
more in
deep
line.
dive analysis.
Exactly.
where we can come up with some projections for where we think it might be able to go.
But going forward, I would just want to show the audience, some key measurements. So this PE, ignore that. It's not actually a negative PE. That's just a gap measure for short-term metrics. Then the price to free cash flow, that's what is interesting. It's 11. So we'll go into the key ratios during the deep dive. But for now, just want to take a look at, just on a cash flow basis, this is already more or less pretty cheap. So if you take a look at not the PEG, but instead the PFCFG, so it's a version of the PEG, it is below 1, which would indicate it's undervalued. And that's going off of the current growth rate. If I want to assume a 12% and above, then it is below 1 going forward. So are there any further questions you have, Austin, for this preliminary
So
analysis?
I'm kind of interested, and you touched on this earlier in regards to their acquisition themselves, and then the fact that you said that they have quite an extensive pipeline. Do you think that there might be, or have they indicated, which we'll answer in the DD, this is just my preliminary question, Fabio, do you think that there might be a potential that management wants to basically consolidate the entirety of their supply chain into one specific business itself? That's kind of where my mind goes with this. And then also too, when I was kind of just doing my very basic preliminary analysis, I noticed that a lot of their sales are to wholesalers. So would you touch on maybe some of the risks present with selling to wholesalers, as well as some of the benefits there?
Well, we've done research on wholesalers before. And what do you remember there's 3, it's a triopoly in the United States, or in the world almost. Do you remember what some of them are?
If I had to guess, one of them is Cardinal Health.
McKesson, and AmerisourceBergen. So that's how the pharmaceutical companies get their drugs distributed across the whole healthcare system. They use these wholesalers who, in essence, are distribution networks for these drugs. So these companies develop them and then sell it to these companies, and then these companies go and sell it to the healthcare systems in which they do business. So no, there's no risk in that. The wholesalers, by the very nature of the wholesale business, have very low margins because they're not taking the lion's share. The lion's share is being taken by the developers of the treatments, which in this case are the pharmaceutical companies. And in this case specifically, Bristol Myers Squibb. So I don't think that necessarily is a risk. What they did when they acquired that business was they were buying a pipeline. So oftentimes when pharmaceutical companies buy other pharmaceutical companies, what they're really acquiring is the pipeline and the potential. And that's going to go into a very special line item on the balance sheet that you really like.
Our one and only favorite. That explains why when I was looking at this, goodwill and intangibles took up roughly 62% or so, like 61.9 something.
For our audience out there, I'm going to ask you this question, Austin. Goodwill is supposed to ideally represent what?
So goodwill represents basically how it represents the earnings potential of when a management acquires a business, but then that earnings potential, if management is overzealous, then through the impairment process that's brought down. But if management is more conservative in their estimate, then the impairment process is not going to be as much. The impairment expense will not be as much. So basically, in plain English, what I'm trying to say is that the management will project earnings when they acquire a business, and then that goes into goodwill, as well as some other factors, but specifically related to acquisitions in and of themselves. That's typically what goes into goodwill. Now, the thing is, and what triggers in my mind, at least, because this isn't really a stock that I'm entirely familiar with. This is, as I like to call this, a Fabio pick. And where my mind would go with this when it comes to goodwill is I would want to see specifically how goodwill is being impaired. If it's a lot of impairment, if there's a high amount of goodwill impairment, then I know that management is overzealous in its application of goodwills, which in that case, then goodwill would be overvalued. But the only way I would be able to see that is during our DD. I'll probably talk about that pretty extensively, since I still believe, Fabio, that these acquisitions that they're making, like you had said, they're acquiring these other pharmaceutical companies to basically provide that future potential. And then also too, correct me if I'm wrong, they're acquiring these other companies maybe to acquire some of the technology that these other companies already possess, and then just add that furthermore to BMY's portfolio. Would that be a correct assumption that I'm making here?
Yeah. Because they want their whole portfolio of drugs. And that has a value. Well, those are a little easier to value. So that goodwill is a little easier to truly value. The pipeline is more difficult because it's contingent on obviously those drugs working, getting through the approval process, etc. So
Selling. Yeah.
exactly. Well, the selling part doesn't necessarily come to play it too much, because if it works and it's a disease and it works better than current treatments, it's going to sell.
Yeah.
So you always need the constant need for improvement. So some people might be, saying, oh, well, how much further can medicine improve? Well, we're not there yet where medicine's so advanced. So don't worry. There's a lot to go. But
something else that I would also like to add too is
mhm.
just sort of kind of to take away from BMY for just a quick second.
Yes.
I specifically, and I say this all the time, Fabio, and you know this, I specifically love goodwill because I believe that is a very good indicator of who is leading the company.
Yeah,
Basically,
it is.
I think that's an exceptionally good indicator of how management is steering the business. And as we always say, Fabio, management and analyzing management and coming to and drawing your own conclusions about management and what management is doing, as well as their prior history, work experience, et cetera, so forth, is exceptionally important during a due diligence. So now to bring it back to BMY, what were you about to say, Fabio?
No, I was just going to say that with the management team, real brief, their CEO is actually quite famous within the pharmaceutical industry. So we'll actually have a little bit to say about him. He's one of the good or one of the greatest pharmaceutical CEOs. They're maybe not the greatest, but he's one of the greatest, and he deserves to be in the spot he's in. And I think so far, he's running the company very well.
Awesome. Then
Now,
that tells me that goodwill will probably reflect that. I would guess then that the management will be more conservative about their application of goodwill, Fabio, which is a good thing. That's what I personally like to see. Like a lot of the times, and I know, like, talking to some of our mutual friends, a lot of people think that I hate goodwill, and that's not exactly the case. In fact, I love goodwill specifically for the reasons that I just outlined. But bringing it back to Fabio, what were you about to say again, Fabio? I know I get so sidetracked about goodwill. I love it, but
so no, just so that's basically our preliminary analysis on Bristol Myers Squibb. We're going to do a deep dive later on Bristol Myers and kind of go into what I actually think the projections are going forward and what's my current position. I'll do like a screenshot during that video. But we're not going to talk too much more about the stock. We're actually going to release first, we're going to release another preliminary analysis on Walgreens Boots Alliance. So keep your eye out on that one. Yep, WBA. So that's coming out soon. So guys, don't forget to share this video. It helps the channel. Be sure to subscribe if you want more content like this in the future, and hit that like button, because that like button helps us with the YouTube algorithm. And be sure to watch out for upcoming videos. Thanks.